Right. Good morning. Good morning. I am checking to see if our live stream is up. Yesterday I had some tech issues, so um, the stream wasn't visible. And so we don't want to have that problem today. Okay. And it is streaming. Excellent. All right, everybody. So good morning. I am Tremaine Wills. I am a financial planner and investment advisor. I own a company called Mind Over Money, where we are on a mission to help you manage your money better, eliminate financial stress, and get back to enjoying life. And so today I am going to be teaching about the difference between term and permanent insurance policies, when it makes sense to have one over the other, and like really give you some practical use cases, right? And so if you want some deeper details about um, insurance, you can download my basics bundle. One of the documents in there, one of the guides, is a insurance cheat sheet. And so the link to grab that is in the comments, either above or below this video. So let's get into it. Well, first, so let's talk about what term insurance is, what permanent insurance is, so you can have a basic understanding. A term insurance policy is a policy where you have insurance coverage under a contract over a specific period of time. So whatever that term is. Common term lengths are 10, 20, 30 years, right? And so when you enter that contract, you have an agreement with this insurance company that should you pass away, your beneficiary will receive whatever amount of dollars is that stated death benefit, right? So it could be $250,000, it could be 500,000, $1 million, whatever that death benefit amount is. But under the terms of that contract, it is only if you pass away during the time period of the contract, right? So if you have a 30-year policy and at the end of those 30 years, you're still alive, the contract for most of the cases terminates, and you've spent that money and it's gone, right? And if you don't get another insurance policy in place, your beneficiaries will not get that money, right? So that is a term contract, or a term life insurance policy. It's for a specific period of time. That's it. That's all. There are some instances where you can be refunded a portion of the premiums that you pay, right? There's different types of term policies, but the basic understanding that you need to know for the sake of this conversation is it is a life insurance contract for a specific period of time. And when that period of time is up, your beneficiary is no longer entitled to the death benefit amount. Okay. Now, in contrast to that, we have permanent insurance policies, right? And there's different type of permanent insurance policies. You have whole life, you have universal life, lots of different options for you to choose. But the common thread among these types is that they're designed to stay in force for the duration of your life. So these contracts will often stipulate that the policy will remain in force up to age 120, right? As long as you continue to make your premium payments, or if you have a paid in full policy. The major difference between the two, right, is a term policy ends at the specific period at the end of the term, and a permanent policy is designed to be in force for the duration of your life. So if you are somebody who is looking for a contract that is going to be applicable no matter how long you stay alive, your best bet is to probably get a permanent policy. Okay, so those are the major differences between the two. So now the question is, which one should you use over the other? The first indicator is going to be your budget, right? How much money you have available to use for a life insurance policy is going to dictate which one you should get. And then secondary to that is going to be, what is the purpose, right? Because the purpose of the policy could be, I want to help supplement my retirement. But if you only have $30 a month to put towards life insurance, then this is not going to be a good option for you, right? So you need to look at your budget and see, okay, how much money is available to put towards the goals that I want to fund using a life insurance policy. And then secondary to that is, okay, now what vehicle is going to get this done in the best way. So when I'm working with clients to identify how we're going to build life insurance into their financial goals, I often recommend a mixture of both. So term insurance is good for solving some problems, where permanent policies are good for solving others. And so we're going to dive into the difference between the two. Now, if I have needs that will only be high priority needs for a specific period of time, I probably want to opt for some sort of term policy. For example, let's say I purchase a home and I have a mortgage on that property, and I want to make sure that should I pass away, the mortgage, the outstanding mortgage balance will be paid, and my family will be able to retain that property and not have to worry about making mortgage payments. In this instance, you might opt for a term policy, 30-year policy, for the value of whatever the mortgage amount is. So let's say I have a $300,000 home and I have $250,000 left on the mortgage. I might get out a $250,000 term policy, right? So the reason why this is good is because at the end of 30 years, when this term is up, my mortgage payments should also be finished. And so it's all right that the term policy is done, because the intention for this particular contract is no longer needed. Right. So this is an instance where using a term policy to accomplish that is a good idea. Another reason you might want to opt for a term policy is, let's say you have young children, right? And you want to make sure that should you pass away before they become adults, that there is sufficient money to help raise them, right? And so this is looking at it as like income replacement. So if you are, especially if you are the primary breadwinner for your family, this is something you want to take into consideration, right? And so if the children are young, I might opt for a 20, 30-year policy, so that should something happen, they would now have resources to help cover whatever expenses are going to be in place for whoever is now going to be um, their caregivers. Okay. And so now with that, of course, you're thinking like, well, maybe I want to make sure I leave money for them, even if I live longer, right? Well, the term policy is not going to accomplish that objective, right? You're going to need to opt for a different structure. But if we're thinking about just the needs of minor children, this is a great way to make sure that there is money available should you pass away prematurely. Okay. So those are some good use cases for term policies. Now, why might you want to opt for a permanent policy? Well, I like to encourage clients to leverage permanent policies to help supplement their retirement. So, a life insurance policy, its primary purpose is to provide a death benefit when you pass away, right? It helps offset the risk of funds not being available to cover your final expenses, to pay off any debts, right? To settle your estate. And so the primary purpose of it is for the beneficiary to get a death benefit, but there are other additional supplemental uses. And so one of those supplemental uses is to provide another vehicle to help you pay for retirement. And so oftentimes what we do is we'll encourage a cash value life insurance policy where you can use some of the money built up inside that cash value to add to whatever money you might have in the stock market. Many people will use this as a alternative to a bond portfolio, right? Because you were looking for something that's a bit more stable, that the amount isn't going to fluctuate as much as your stock portfolio might fluctuate. And so leveraging the cash value inside of your insurance policy is a great way to do that. By no means do I ever recommend that a life insurance contract replace a stock portfolio, because it's not designed to accomplish the same goals, right? But it can accomplish similar goals to what a bond portfolio would do. All right. So that is another reason why you might want to have a permanent life insurance contract in place. So as you're thinking about putting together this entire financial plan, like what are all the vehicles that you're going to use, think about the needs that you have. Think about how much money is available. Think about how you want to put all the pieces of the puzzle together. And that's going to help you identify which type of life insurance makes the most sense. And over time, you might realize that, okay, I probably do need some sort of permanent strategy in place, right? Now, there are some people that can self insure, right? If you are a higher income earner and you have many, many assets, and to be able to pass that, um, those assets on, and you don't have to worry about being able to cover the cost and liquidate your estate, like all of those kinds of things that an average individual is going to need support with. And so some people are able to self insure, but the vast majority of folks, that's not the case, right? So thinking about how we're going to make sure our estate is liquid and we get what we need, financial planning helps solve that. And oftentimes we leverage life insurance contracts to help accomplish those goals. Okay, so I know I said a lot, but we're going to summarize. And basically, the difference between a term and a permanent insurance contract is a term policy expires at the end of the period. When that period is up, the contract is done, your beneficiary is not entitled to anything, right? A permanent policy is designed so that as long as the payments are made or it's paid up in full, your contract will be enforced for the duration of your life. And so there are many more benefits and features that come with a permanent policy, but with that is additional costs, right? So permanent contracts are more expensive than term policies, but if you think about it, you want to not just look at price, you want to look at what's the value. What is the purpose of this contract? Does it do what I need it to do? Because sometimes we're looking for the cheapest option, and the cheapest option is not going to accomplish what we need it to accomplish. So yes, consider budget, but also consider what is the objective, what is the goal that I need to reach. And so for many of us, we're often going to need some combination of the two in order to accomplish everything we want to accomplish. So the debate over should I have term, should I have permanent, a good advisor is going to say it depends. And they might often also say you might want to have both, right? Depending on what your goals are. So I hope that this was a helpful breakdown of the difference between term and permanent policies, some use cases on how you can leverage them inside of your financial plan. If you know anybody who has additional questions, you can send this video to them. And if you want to have a life insurance cheat sheet, you can tap the link in the description or in the comments below this video and download that free download. And if you have questions specific to your situation, book a discovery call, which is also linked below this video. All right, so this is awesome. I will see you all tomorrow for our next quick tip and giving some gems about money in the morning. Have a fantastic day.